If I could choose one single piece of information from which to place a trade, it would be this one: the direction of the trend. I'm sure you've experienced something like this. You placed what looked like a perfect trade. Good setup, nice price action, and it still managed to stop you out within minutes. 9 times out of 10, when that happens, we've misjudged the market environment. In this video, we're going to break down how to tell whether the market's trending, ranging, or somewhere in between, and what you can do with your trading to make sure you're working with that, not against it. Hi guys, I'm Jasper, market analyst for WeTrade and founder of Trading Writers, and I'm here to help improve your trading education. It's important to understand that CFDs are complex instruments and come with a high risk of losing money rapidly due to leverage, and a significant percentage of retail investor accounts lose money when trading CFDs with this provider. You should consider whether you understand how CFDs work and whether you can afford to take the high risk of losing your money. I guess you can think about this video as applying that expression, seeing the forest for the trees in trading, because it's so easy to get caught up in individual price moves or news headlines and forget to ask the bigger question: what kind of market are we in? Back on the brokerage desks in London and New York, I saw variations of this same mistake cost traders thousands, sometimes more. Trading a trend-following strategy in sideways market, recipe for frustration. Selling the highs during a strong trend, unlikely. Like I've said in other videos, trading is all about putting the odds in your favor. Knowing whether the market is generally heading up, down, or sideways just stacks the odds a little bit more in your favor, boosting your chances of profitability across a series of trades. Okay, so here's what I'm looking to go over today. What is the market environment? Trends explained, up, down, and transitional phases. Range-bound markets and mean reversion. How to identify each type with price and indicators. What to trade and how to manage risk. Real-world examples, and some WeTrade tools and tips. Make sure to check out my future videos covering all the things you need to know to be a successful trader, from analyzing charts to risk management to advanced trading techniques. And if you got this far, then please smash that like button and subscribe to see more videos like these as soon as they come out. What is a market environment? This is a big picture stuff. It's the general structure of how the price has been moving over time. Of course, we only care about what happens in the future, not the past, but the idea is to use the past to inform our future actions. There is a big overlap between the market environment and trend. In my humble opinion, the trend is probably the biggest part of what makes up the market environment. That's why today, this is a discussion of trends. But there are other aspects too. Volatility, like how much the price is moving up and down over a specific time period, and how that compares to the average. Liquidity, how easily you can get in and out of trades at the price you want. And free market sentiment, people are generally fearful, exuberant, or somewhere in between. And positioning, which you can find in data like the COT report, which shows how big players change their longs and short positions over the previous week. All of which I'll cover more in other videos, and definitely drop a comment on the video if there's one of these in particular. I know a lot of people like the COT report. If there's one of these you want to know more about, let me know. Now, how does all this help with trading? Well, in a nutshell, if you use the wrong tools to match the environment, you're just going to grind your account balance down. But if you use the right tools, you can even get away with other mistakes just because you are in alignment with what the market wants to eventually do. There are different indicators you can use to define a trend, and I'll get to those in a minute. But in very simple terms, an uptrend is a chart that shows the price starting in the bottom left corner and finishing in the upper right. A downtrend is the opposite, starting in the upper left corner and ending in the bottom right. And of course, prices don't move in a straight line. So what do these trends actually look like? An uptrend has higher highs and higher lows, and a downtrend has lower highs and lower lows. And they're both made up of what we call swing highs and swing lows. These are the turning points in the market. I'm a big fan of what are called fractals. These are basically 3 candle or 5 candles, if you preferred, pattern with the middle candle forming the high or low. So in an uptrend, when the price pulls back from its high, then forms a swing low that doesn't break the previous low, then that makes a new high again. That's a textbook uptrend. But as anyone who's traded for more than 5 minutes can confirm, it's not quite so easy when you have to spot the trend before it's happened. One of the big questions is, after a pullback, is that just temporarily trend pausing, or is it a reversal? And don't worry, I have a few rules to share that I hope will make this task a little easier next. Some traders use price action only, but most of us lean on a few tools to help keep us honest. I don't have time in this video to go into mega detail on indicators. I have a dedicated video coming up on them soon. Anyway, here are the heavy hitters. Moving averages. These smooth out the prices and help define trend direction. For example, a 20-period moving average is sloping upward with price above it. That is a sign of an uptrend. MACD, it's a blend of moving averages and momentum. The slope of the MACD line and the position of the histogram relative to 0 are helpful in determining the trend. RSI is a momentum oscillator that tends to move within certain ranges when the price is trending up versus down versus sideways. A ranging or range-bound market is where prices oscillate between a clear top and bottom, which are support and resistance. If you're wondering what these are, I cover them in the next video. Basically, we can say that in a price range, there's no dominant direction, it's just going sideways. Swing highs and lows, they're still useful in the sense that there will not be any continuous step up of lows in an uptrend or step down of highs in a downtrend. The range will just chop back and forth between them. And so there won't be any defined pattern, and then that helps you know it's a sideways trend. These phases happen on any time frame, meaning they can last for hours, days, or even weeks. In ranges, traders often look for mean reverting opportunities. That just means when the price moves too far from its average, it tends to snap back. You'll see indicators like Bollinger Bands, where if the price hits the outer band and reverts back to the midline, it's often expected. RSI, the top and bottom of the range tend to form when RSI is overbought and oversold. More on these in a future video. And the stochastic oscillator, similar to RSI, often used in ranging conditions. I know people are a bit wary of cherry-picked examples when demonstrating an idea in trading, so let me just flip through the current chart of the euro-dollar using the 1-hour time frame. And as you can see, as I scroll back, the price is in a downtrend. We know that because the price is 1, sloping from the top left to the bottom right, 2, is forming lower swing lows and swing highs. And if I draw a moving average on here, you can see the price is usually lower than average. But before this downtrend, the euro is actually in an uptrend. We know this because all the opposite is true versus the downtrend. The one that we just saw. Price is sloping up from bottom left to top right. Price is forming higher swing highs and lows. And the price is trading mostly above the moving average. And indeed, before this uptrend happened, there was a sideways range. Do you see how the price doesn't make any progress above the peaks, but equally barely moves lower past the lows before rebounding back into the middle again? And if I add the RSI indicator, you can see it is bouncing from an extreme high to extreme low reading as the price moves inside its range. If the market is trending, trade with the trend. Avoid counter-trend entries unless you're extremely experienced, and use pullbacks for entries. You don't need to buy the exact low, Just don't buy near the high in an uptrend, and vice versa for downtrends. Set tight stops behind recent swing levels. Let the winners run. Use a trailing stop if preferred. And if the market is ranging, buy at support and sell at resistance. Use oscillators like RSI and stochastic for confirmation, and place stops just outside the range, and keep profit targets more modest because there's no defined trend. This is a big topic, so I'm just covering core ideas here. How it works is that trends turn into ranges, ranges break into trends. So your job is to stay flexible and look for signs of change. So some key signs a range might be breaking: there is a break of the top or the bottom of the range, number one. Indicators move outside of their price ranges. And then the key signs that a trend is fading: price fails to make new highs in an uptrend or new lows in a downtrend, and the indicators don't match the price, showing divergence. So what kind of market are you in right now? If you don't know, don't place a trade. Simple as that. Spend a few minutes with your chart. Ask, are we making high highs and high lows? Or are we bouncing inside a box? You really don't need more than the price, but you can add other tools to help. Is RSI showing momentum, or are we stuck at 50? Using moving averages, trend lines, Bollinger Bands, whatever helps. You read the market rhythm. And here's the key: don't trade what you want the market to be doing, trade what it's actually doing. All right, that's all I have for now. If you've ever been caught trying to trend trade in a range or sell a higher high in an uptrend, drop a comment. And if this helped you make sense of market trends, do me a favor and hit that like button. This video is for educational purposes and does not constitute investment advice. See you next time, and until then, trade what you see, not what you hope.